So, have you ever wondered how owning a tiny piece of a company, a stock, can actually make you wealthy? It can feel like this super complicated exclusive club, right? Well, today we're gonna tear down those walls. We're gonna show you exactly how the stock market actually works. Let's get right into it. Okay, let's start with the biggest question, the one that really matters. So, you did it. You finally clicked buy, and now you own a share of a company. Awesome. But, now what, right? How does that little line on your screen turn into, real money in your pocket? That's the puzzle we're gonna solve right now. Well, it turns out there are basically two main ways a stock can pay you. And to make this super simple, we're gonna use a fun little analogy. Think about it like this. You've got two choices. You can either plant a money tree or you can own a golden goose. Okay, so on one hand, you've got the money tree. This is all about growth, right? You plant a tiny seed and you're hoping it grows into a massive tree. Then you've got the golden goose. This one isn't about getting bigger. It's about reliability. It just keeps laying those little golden eggs, which are basically cash payments, again and again. So let's talk about the official names for these two concepts. All right, first up, the money tree. The technical term for this is a capital gain. So picture this. You buy one share of some exciting new tech company for, let's say, $50. You hold on to it for a few years while they're building cool stuff, then boom, the world catches on and your one share is now worth $500. The second you decide to sell, that $450 difference, that is your profit. That's a capital gain. You're basically making a bet on the company's future success. And now for the golden goose, which we call a dividend. And honestly, this is one of my favorite things in finance. Think about huge, stable companies, like a Coca-Cola or something. They're not exactly growing at warp speed anymore, so what do? They reward you, the owner, directly. They'll literally take some of their profits and drop cash straight into your brokerage account, just for owning their stock. I mean, it might be just 50 cents a share, but hey, if you own 1,000 shares, that's $500 in your pocket for doing, well, nothing. It's the definition of passive income. All right, let's tackle something that trips up pretty much every single new investor. You turn on the news and all you hear is bad stuff about the economy, right? High inflation, job losses. You think, oh man, the market must be tanking. But then you look at your portfolio and it's going up. What is going on? How is that even possible? Let's clear this up. Here's the big secret. You ready? The economy is all about what's happening today. It's a snapshot. But the stock market, that's a time machine. It's always looking to the future, like 6 to 12 months down the road. So yeah, the news today might be terrible, but if all the big investors think things will be amazing next year, stock prices are gonna go up right now. If you're just reacting to today's headlines, you're already playing catch up. So, growth, dividends, looking into the future. It all sounds pretty awesome, doesn't it? But, okay, let's pump the brakes for a second. We gotta be real here. This isn't some magic button you press to print money. There are definitely downsides. Because here's the deal. Being a smart investor isn't just about chasing the wins. It's about respecting the risks. You absolutely have to understand them. So let's get serious and talk about the ways this can go wrong. The very real ways you can actually lose money. You're basically looking at three big dangers. First, the company you invested in could just go bankrupt. And if that happens, your shares, they can become totally worthless. Just poof, gone. Second, the whole market can have a meltdown, a crash. We've seen it happen. Your entire account value could drop 30% in like a week. And third, you have bubble bursts. Remember the tech wreck in 2022? Yeah, that. And this, right here, is exactly why putting all your eggs in one basket, betting it all on one stock, is just, it's not investing. It's pure gambling. Okay, I know, that sounds absolutely terrible. But wait, don't panic, don't run away just yet. The good news is, after decades and decades of this, a really powerful, clear strategy has come out on top for protecting yourself from these exact things. So, what is it? How do you stay safe?
The answer is actually pretty simple, and it comes down to a great saying. Don't look for the needle in the haystack, just buy the whole haystack. The fancy finance word for this is diversification, but honestly, buy the whole haystack is a much better way to think about it.
So how do you actually buy the haystack? Well, you use something called an exchange-traded fund, or an ETF for short. Just think of it like a shopping basket, but instead of groceries, it's filled with tiny pieces of hundreds of different companies. And you can buy that whole basket with one click. Like when you buy one share of an S&P 500 ETF, you instantly own a tiny slice of the 500 biggest companies in the US. We're talking Apple, Microsoft, Amazon, all of them in one go. It's instant safety. And the best part? Because no one is sitting there trying to pick winning stocks, the fees are super, super low, which saves you a ton of money over time. So let's go back to that quote. Instead of trying to find the one winning stock, which is like finding a needle in a haystack, most smart investors just buy the whole haystack. Think about what that really means. If one of those 500 companies goes belly up, does it wreck your investment? Nope, not even close. Because you still have the other 499 companies chugging along, growing and picking up the slack. You've basically built a shield against that single company failure risk. For most of us, for people who don't want to spend their nights staring at spreadsheets, this is the answer. This is the strategy. It's the ultimate set it and forget it approach. It lets you capture the growth of the entire economy without needing to pretend you're some kind of Wall Street genius. Okay, so we've talked about how you make money and we've talked about how you stay safe. But now we need to talk about the final piece of the puzzle. And honestly, it's the most powerful force in this entire game. It's not about being rich or being a genius. It's about your secret weapon, time. You see, the biggest secret to winning with money isn't being a genius trader. It's just being patient. It's about letting this magical force called compounding do all the heavy lifting for you. The best way to think about it is like a tiny snowball at the top of a really, really long hill. At first, it's nothing. But as it starts to roll, it picks up more and more snow, getting bigger and faster, until it becomes this massive, unstoppable force. That's exactly what your money does over time. Don't believe me? Let me show you what this actually looks like. Let's use a real number. We'll start with something small, something totally manageable. $100 a month. Okay, $100 a month. Now let's add that secret weapon we talked about, time. A lot of time. We're gonna invest that $100 every single month, starting from age 20. We are giving that snowball a massive hook to roll back. And here is the mind-blowing part. By the time you're ready to retire, that simple, boring $100 a month could become over $1 million. No, that's not a mistake. That is the power of letting your money work for you over a long time. It is absolutely incredible. Now, look, I know you might be thinking, man, I wish I'd started when I was 20. But listen, that kind of thinking gets you nowhere. There's this great quote that says, the best time to plant a tree was 20 years ago. The second best time? Right now. It doesn't matter if you're 20, 30, 40, or 50. The most important day to start is always today. So now you know how it works. You have the tools and you have the secret weapon of time on your side. The only real question left is, what kind of financial future are you going to start building for yourself starting today?